What's up, homies? Welcome to another episode of the Homies Real Estate Podcast. Here's your host, Anthony.
I'm Angel.
I'm a realtor.
I'm a lender.
And together, we're going to break down this crazy real estate market. Angel, it's the beginning of the month. What time is it?
It's time for the market updates for Los Angeles.
Ooh, market update time. Did home prices in Los Angeles County go up? Did they go down? Are homes selling faster? Are we transitioning into a buyer's market? Are we going to see a market collapse? We're going to cover all that in this real estate market update. So, as usual, I'm just going to go over the data quickly. Me and Angel are going to discuss it, give our projections for the future, and then also some advice for buyers and sellers in this market. So, let's go ahead and get started. The median sales price in Los Angeles County decreased from $895,000 in June 2022 to now $863,000 in July 2022. That's about a $32,000 decrease. Over the past 12 months, that's an increase still of about $40,000. So in July 2021, we're looking at $825,000. When we look at median price per square foot, another really good indication of where the prices are actually increasing or decreasing, it did drop from $610 median price per square foot in June 2022 to now $591 in July 2022. A year ago, in July 2021, that's $547. So we're still up, roughly $45, $46 since then. When we look at how fast homes are selling, right now we have a median days on market of 13 days. So it did increase from 11 in June 2022 to now 13 in July 2022. Which is quite an increase. We haven't been at 13 since January of 2022. And then the last time was January of 2021. When we look at inventory month supply, if there was no more homes listed in Los Angeles County, currently it would take 2.5 months for the homes on the market to be sold. Now, this has increased significantly in the last 3 months. In April 2022, we're talking 1.6 months, and it's steadily increased to now 2.5 months. Remember, a balanced market is 5 to 6 months, and then a buyer's market is 6+ months. So we're still in a seller's market, but we're trending towards more of a balanced market. When we look at how many listings are on the market, is it increasing? It's increased quite a bit. We have about 1,500 more listings than last year. We're looking at about 13,400 listings as of July 2022. Last July, we had 14,300. So we still have less listings than a year ago, but this is significant progress from our lows that we had in April 2022, which was around 9,500 listings. Historically, over the past so from 2017 to 2019 in July, we're looking more along the lines of 20,000 listings. So, we're about 60% of the way there. When we look at closed sales, so are we having more closed sales than a year ago? No, we are not. We have 33% less sales than a year ago. We're about 4,573 sales. Last July, we had about 6,800 sales. Typically in July, we're looking somewhere in the ballpark of about 6,000 sales. So we're off by about 1,500 sales that we typically see in July. Typically, July is a hot time of the year. There's typically more homes listed, more buyers looking, and more sales conducted. So, Angel, what caught your attention about this real estate market for Los Angeles County?
Honestly, pretty much everything, right? So for you buyers, it seems like more and more it's becoming your time. Literally every trend we went over with favors you buyers right now, right? More days on market, median home price fell, price per square foot fell. There's more inventory out there, right? More inventory month supply. These are all positive trends for you buyers. And these are things that we now, I think, Anthony and me with our clients are seeing in the market, right? It's you're going out to put an offer and there's literally like 1 or 2 offers on the house now. Or compared to, again, 2-3 months ago, we're talking double-digit offers on properties, right?
Yes.
Lines outside the door just to view the property for open houses. Now I pass by open houses and talk to a realtor and they're there by themselves then they're saying they're only getting 3 to 4 people to come in, right? So for you buyers right now, this is a great opportunity. Yes, rates are a little higher than they were a couple months ago, 3 months ago, but then again, you're not dealing with you're dealing with a lot less competition right now, right? So this is a beautiful window for you to get in, get your home. I think we kind of spoke on this last market update when the trends were favoring you guys, and now it's even favoring you guys more now, right? And one thing Anthony mentioned that I thought was really, really big is we're in the month of July. July is the hottest market, or the hottest time. July and August are the hottest time for real estate. So for all these trends to favor you buyers, it's a great sign for you guys. Again, to really take action and get yourself in a house.
Yeah, Angel couldn't have said it better. This is the best market I've seen for buyers since the pandemic started. I mean, to be able to go out now and only compete with a couple other offers, to be able to have the negotiation power to now ask for closing costs, to now ask for repairs. Trust me, this experience now is so much better for you buyers, and I don't want any one of you to squander it, because there's no saying when we're going to go back to that buyer frenzy, because likely when interest rates drop back down to pre-pandemic levels, don't know when that will be, maybe in the next 6 months or so, we're going to get that flood of first-time home buyers that were priced out. And once we get that flood of first-time home buyers that were priced out, you're going to be competing with 10 plus offers again. So there is this window of opportunity here where maybe your interest rate's going to be a little bit higher, but that's okay. Like we said before, date the rate, marry the home. You can refinance that interest rate in the future. I mean, interest rates aren't even all that bad anymore either. We've seen interest rates drop from 6% now to 5%, even under 5% in some instances, depending on credit worthiness, type of loan that you're taking out. So the monthly payment isn't even all that high like it was a couple months ago. So there's really like a unique opportunity right now to purchase. And I would say this market is very favorable for you sellers that are looking to upgrade, because we know that the last 2 years, it's been very tough to sell your home concurrently, meaning you need to sell your home to purchase another home, because there's a preference that buyers are looking for, where an all cash offer is at the very top, then a conventional 20% down, and then at the very, very bottom of the tadpole is a seller that needs to sell in order to purchase, because there's a lot that could go wrong. Now you have to worry about 2 sets of buyers and making sure that they fulfill their obligation to move forward. So right now, when there's less competition, your offer is going to be able to be in consideration. Now, you're going to be able to sell your home concurrently and purchase and likely upgrade. And again, if you upgrade right now in this real estate market, and if interest rates drop, let's just call it 1%, purchasing power goes up 10%. Likely the home across the street that you now upgraded to for 800. Okay, let's just say you purchased a home for 800,000, you sell your home off for 600,000. So you upgraded 200,000, right? And the neighbor's home across the street in a year, because interest rates drop down in a percent, sells for 880,000. You now gain $80,000 worth of equity instead of the $600,000 home going up $60,000. So, and gaining $60,000 worth of equity. So the higher the purchase price, the higher the value of your home, percentage wise, the more you're going to get as interest rates decrease. So it's just something to consider. But I mean, the most important takeaway here is that this right now might be the best time for a buyer to purchase in the last 2 years. And we don't know when interest rates are going to drop back down. It may happen soon. It likely will. We're starting to see signals that inflation is starting to cool off. So, once that cools off, we're likely going to see interest rates drop back down. So don't overlook this opportunity, buyers. Like really, really don't overlook it. Yeah.
No, yeah, I think you hit it right on the nail. It's a great opportunity, guys. And how Anthony said, if rates drop, if you buy now and rates end up dropping, which we're predicting in the next 6 months to a year, you guys are just gonna get to take advantage of it, right? And you're gonna be able to refinance with equity in your home to a lower rate, to a lower payment, and not have to worry about the competition that will eventually again hit the market.
Yep, absolutely. So, Angel, let's talk quickly about interest rates and like the history of interest rates, where it's been the last couple of years. So, pre-pandemic interest rates were somewhere in the ballpark of 3.5% up to 4%, right?
Yeah, around there.
And then the pandemic happened. we cut down interest rates almost to 2.5% more or less,
Yeah,
right?
I mean, there's FHA rates at like 2% at
Yeah.
some point, so it's
Yeah.
insane.
And that was from the period of, let's call it, July 2020 through pretty much
The beginning of this year,
January 2022. So from
yeah,
that period,
or
interest rates.
December 2021, literally right when the new year started, that's when rates went up.
Yeah. So from that period, right, interest rates were between 2.5 to, let's call it 3, 2 to 3, somewhere in that ballpark. And then from January to April, they just increased so fast. It was crazy, right? From 3 to like 6%.
No, not that high.
Okay.
In April,
5 to 5.5%.
or maybe like in the 5s. Yeah.
Okay, so like just call it 3 to like 5.5%.
Yeah.
It eventually peaked at 6%
6% in May.
And then since May, interest rates have slowly started to
come down a bit,
like plateau and come down, right? So from 6% to what, like now 5%?
So after it was already getting better, rates were getting better since actually June when the Feds announced their last or June when they announced the rate hike. I believe it was in June, or it might have been May. The second to last rate hike that they did, rates got a little better since then. And then since their last announcement, which was last Wednesday, a week ago from today, they announced their 75 basis point rate hike. Interest rates, remember, they are not directly affected by that. They're indirectly affected by the Fed fund rate increasing. They actually dropped quite a bit, right? So the average 30-year fixed rate is about 5%. Today, I know over yesterday and today, we did see the rates come up quite a good amount. Not a good amount, but they did go up slightly. I haven't checked the rates today, but I know they're probably up slightly as well. But yeah, I mean, still better than just 2-3 weeks ago. I want to say the average rate was about 5.5, 5.6. I would assume today, even with the rate hikes, we're probably about 5.1. If I were to make the assumption. But yeah, the rates are looking better for you buyers right now, even with a little bit of an increase over the last couple of days. Great opportunity, like Anthony said. Conventional loans, depending on your credit worthiness, you can still get something potentially in the 4%.
Yes. That's crazy to think about. I mean, right now, think about it. Prices have dropped. So let's look at the median sales price. And homies, if you want individual city market updates, you can find them on our website, or you can just request them from us, or you can sign up to become a homie and get these personalized market updates sent directly to your inbox, directly to your phone number, directly to your text messages. And I highly recommend it. But our team yesterday pulled charts for over 300, about 200 to 300 cities and counties in California. And we are seeing this trend across the board. Homes are taking longer to sell, and they've increased quite a bit. In a lot of cities, they increased, because right here in Los Angeles County, it just says 2 days increase. But in a lot of cities, they've almost doubled. They almost went from like 7 days a month ago to now 14 days. So you have a little bit more time now to look at homes. But I would say still get pre-approved ahead of time. Get all your ducks lined up. Right now is the opportunity of a lifetime to be able to get a home at a relatively affordable price, knowing that in the future you can increase your you can refinance to decrease your interest rate. Because
my bad. Finish that.
Yeah. No worries. Yeah, just because, like I mentioned before, and I'm gonna keep saying this, once interest rates drop back down, we're going to get that flood of first-time home buyers that got priced out, that are waiting out the market. And once they get a sniff of these interest rates dropping, that doesn't mean that you're going to get a lower monthly payment, because now prices are going to go up, because now they got qualified for more, and now you're going to have more competition. So at the end of the day, what you really care about is the most affordable monthly payment. Like, I'm pretty sure that's what you care about, right? Yeah. And the most affordable monthly payment might be now, and then refinancing in the future to a lower interest rate.
So I just wanted to show you guys how volatile the market is. Like, I haven't checked the rates yet today. I think yesterday we were at about 5.2, probably the average 30-year fixed. As of right now, this morning, the average 30-year fixed rate is 5.5, right? So Monday we were at 5% average 30-year fixed rate. Now we're up to 5.5. FHA's average 30-year fixed is 5%. Again, these are just averages. That doesn't necessarily mean these are my rates or the lender that you're shopping with rates. This is just to get you an idea of which way the market's heading, right? So that's how volatile the market is. And I think Anthony mentioned a great point, is so many people want to wait to get pre-approved so the perfect window happens. And like right now, that can literally mean a day. That can mean 2 days. Things can change, right? I literally qualified somebody Monday and I told him, like, look, the rates are awesome right now. It doesn't mean that these rates are going to stay the same. And I actually have to finish something up on his pre-qualification today. So I'm going to have to tell him, like, hey, I'm sorry, these last 2 days alone, the rates have changed, right? And it's kind of something, a heads up I had given him when I talked to him on Monday, like, hey, I don't know if this will stay this way, but as of right now, these are today's rates. They're usually not this low, so I can't promise you that they stay this low, right? And that's just to show you that how quick things change, right? I'll finish it up with being pre-approved is so important, right, guys? Because if you try to do everything last minute, you might miss that window of opportunity, whether that's getting the house you want, locking in your rate where you want, or maybe just both, right? You don't get your house and you don't get the rate you want, right? So I guess the saying I'm going to go with today is you got to stay ready so you don't have to get ready, right, guys? Like, just be ready to make an offer if you really want to get in a house. Make sure you have all your ducks in a row with your lender, with your agent, to make sure that if that window of opportunity is there, you can pull the trigger.
Yes, absolutely, Angel. So let's go ahead and give our projection for the future. I mean, I got the receipts for last podcast's projection, and we were both off. We both have very similar projections. We both projected that prices will decrease, but not much. We didn't expect a $30,000 decrease. We expected more along the lines of about a $10,000 decrease. So we were both off, Angel. It looks like the market is still trending towards a balanced market, right? We're starting to see homes sell on the market a little bit longer. We're starting to see less buyer demand. We're starting to see prices decrease. Are we going to see that next month? What's your projection? We just witnessed a $32,000 median price decrease in July.
I'm going to go with it is going to decrease. And reason for that is I haven't checked today, but at least the last month, mortgage applications have dropped for the last month, every single week consecutively. Maybe this week, they come out today. So maybe when I review them today with the rates getting better over the last week, maybe they go up a little bit, but, the less people applying for loans, the less offers you're going to be getting on properties, which can potentially drive the median price down.
Yes.
So that's what that's my guess. It's going to go down. I don't think much more though. I think we'll be, let's say, around another, we're either going to stay at the same amount or like a $5,000 difference. $5,000 lower median price.
Yeah. So I think prices are going to decrease. I think they're probably going to decrease from another 15,000 maybe. We're just seeing a lot less buyer demand right now than we typically would see. But I mean, once it hits, like, we're at 863 right now. Once it hits around 850, like, I don't know how much lower it can go than 850. Just because, like, 850 is pretty much what we saw June 2021. That's what we saw like a year ago. So to say that prices in a whole entire year have kind of stayed likely the same, not very likely in my opinion. So yeah, I'm gonna say it's gonna be around 850, $850,000 for my projection. We'll see what happens. No one ever knows. I did not project a $30,000 decrease last month, but the signs are pointing more towards a balanced market, more towards prices decreasing. But yeah, that pretty much wraps it up, homies. If you're not watching this on YouTube, highly recommend it. I should have said that in the beginning of this podcast. We put the charts there. It's much easier to dissect when you're able to see the physical charts. If you're not a homie and you want personalized market updates, just let us know. I'd be more than happy to send you the application, not the application, but like a link, a form to fill out where you tell me which cities, how often you want the updates, how to receive the updates, and I'll send them over to you. And then if you haven't already, subscribe to our YouTube channel. We love producing this content for you. I hope it's been very enlightening. And Angel, where can we find you at?
At Your Mortgage Angel on Instagram.
At Your Mortgage Angel on Instagram. You know where to find us. At the Luevanos Group. And with that said, homies, I want to wish you all the best. Take care and stay safe.
Thank you. Hey, homies, it's Angel from the Homies Real Estate Podcast. This podcast contains our opinions and is for educational purposes only. It does not guarantee any projections and should not serve as the basis for any purchase or sale in real estate.